Us live now is John Kehoe, senior writer at the Australian Financial Review. John, thank you for your time.
Morning, guys.
Thanks, John.
Now, RBA left the interest rates on hold yesterday. That was pretty expected, but what was interesting was the Treasurer renewing his monetary policy.
Yeah, so the agreement between the government and the RBA renewed without change, so sticking with the 2 to 3% inflation target. There's been a bit of a debate whether that target should be lowered because it's getting really hard to hit. But in the end, Frydenberg was never really going to change the target, but he was thinking about putting more onus and pressure on the bank to hit the target. And in the current low interest rate environment, that could have even meant even lower rates. In the end, he's refrained from doing that, and he's given basically Philip Lowe the benefit of the doubt to hit that target over the medium term. So he's given the RBA a little bit of wriggle room to get back inside that target because they've missed it for the last 15 quarters, basically all of Philip Lowe's governorship. Now, Philip Lowe might privately say, and has publicly said, well, I need some more help from fiscal policy to hit that target as well.
One of the points that the Treasurer made in your newspaper, the AFR, yesterday was that he made the comparison with other advanced economies and the valid point that the vast majority of the advanced economies are experiencing low inflation right now as well.
Well, this is a global phenomenon. It's really just catching up to Australia now. And I think it's all because of technology and the digitalisation of the economy. That's bringing prices down. I mean, technology is potentially replacing workers, giving workers less bargaining power in the workplace. Globalisation as well. You can buy goods from all overseas now, more competition from global goods. And there's just a lot of extra supply of labour coming into the market all around the world. More women are working, and people tend to be working for longer these days as well, maybe because we're a bit fitter and healthier. We don't have to retire so early. We're living longer, so maybe we need income for longer. And all that is sort of suppressing wages and suppressing inflation. The good side of that is actually employment growth in Australia and most advanced economies is very strong.
And just on Kieran's point as well, when you look globally, it's also a very high inflation target to be aiming for 2%.
Yeah, it is. A lot of central banks have just a 2% target in advanced economies. We're 2 to 3, so we're certainly more at the upper end. The Fed in the US has a 2%, and they're even reviewing that. Bank of Canada's reviewing their targets as well. So, look, the danger was at the moment, if you lower that inflation target, that reinforces in people's minds lower inflation expectations. You get even lower inflation outcomes, lower rates, and it means they run into this zero lower bound with the interest rate or quantitative easing even earlier. So it's a risky move to lower at this point in the cycle because it actually reinforces some of the problems you're trying to address.
And what's your take on the bank profits? They've largely disappointed, haven't they, in terms of expectations? Yeah,
the bank's profit's definitely under pressure. We saw Westpac, albeit still nearly a $7 billion profit, fell 15% earlier this week. We've got NAB's profit result tomorrow as well. Now, Westpac's being forced to raise $2.5 billion in fresh shareholder capital. NAB might have to go to the market and do the same tomorrow. We'll wait and see on that. But basically, this is all about being squeezed by the remediation costs from the Royal Commission, which are running into the hundreds of millions or billions of dollars collectively.
I think it's $10 billion collectively.
Yeah, collectively across all the different institutions, not just the banks. They're getting squeezed from the lower interest rates because their interest rate margins, because they can't drop the deposit rates below zero, are getting squeezed. And as well as that, credit growth's pretty soft, so they're not making as much money from loans.
Okay, John, great to see you. John Kehoe from the AFR.